Happy Wednesday, everybody. Today is June 2nd, 2021. I hope you are doing well. Hope you enjoyed your long Memorial Day weekend. I do also hope you took a few minutes during that weekend to just think about and remember that there are a lot of people that lost their lives and gave the ultimate sacrifice for us so that we're able to do all the things that we do every day. So we're very grateful to them and for everyone who fights for our country. So thank you very much. Sorry for delay in the video, but let's jump right into the review of what happened last week and what we're going to look for the rest of this week. If you did not see my sell in May and go away video, it's a short little video I did a couple of weeks ago. Take a look for it on the YouTube channel. If you want it, let me know. I'll send you a link to it. Seasonality in the markets is back in the news. It's a conversation people are having again. So we'll keep you up to date on what's going on. But we are still holding optimism into this reopening of this economy with an excitement that it's something that we haven't seen in a while. So we're going to keep an eye on that. Last week was another strong week of the market. Let's run it down a little bit. The S&P 500 was up 1.2%. The Dow Jones was up around 1%. The NASDAQ was up over 2%. Russell 2000 was up close to 2.5%. 10-year yield was down. Gold was up. Bitcoin had a rough week. Lost 35% in the month of May alone. In fact, down 43% between May 7 and May 23. Definitely something we'll keep an eye on. May ended with the Dow up nearly 2% for the month. S&P up a little bit over 0.5% on the month. The NASDAQ was down 1.5% for the month, and the Russell 2000 was up just under 0.5%. So let's zero in a little bit on last week. Monday started strong on the back of some Fed speak about the transient nature of the inflation we're seeing. I'm hearing from a number of small business owners that are not so sure about this, but what we're seeing from the Fed and their comments at this point is that this is all based on the supply chain and what's going on with that, not demand. As time goes on, as the Fed explains it, that the supply is going to catch up and we're going to resume that downward pressure on prices that we saw pre-pandemic. So the S&P 500 was up about 1% on the day. 10-year yield was down to 1.58%. The NASDAQ was up almost 1.5%. That's Monday. Tuesday came in. Most of the major indexes gave back a little bit on Tuesday. As the May consumer confidence came in, showed a little bit of weakness. The Reddit stocks got a new bid. A revisit of an old story. So Wednesday was a stabilization day. S&P 500 was up about 0.25%. Most of the traders were positioning for the data that was coming towards the end of the week. Thursday was a gap higher open day. Another low weekly jobless claims report and a strong durable goods number. More information on the Biden tax plan. We're going to it was a revisit to the danger to this market. One of the dangers of the market that's out there. And the S&P 500 ended the day just slightly higher. Friday we got the core PCI report. That's what the Fed's watching very carefully for inflation. It was hotter than the market was expecting. I've been telling you that it was going to be hot, over 3% year over year. Remember the market, so we knew it was coming, but nonetheless, the market ignored it early, rallied on the idea of the transient inflation, but there was little follow through buying, probably because the trade desks were emptying out for the long weekend. Profit taking hit at the end of the day. The S&P 500 closed up just slightly on the day. This week is the first week of the month. As always, we get it's jobs week. So we'll see the non-farm payroll jobs on Friday, ADP today, Wednesday, and the weekly jobless claims report on Thursday. Also, we've got at least 4 Fed presidents speaking publicly, so we'll have to watch all that for you and see how that comes out. Also, what can make this market move? This is a big question that we're going to talk about over the next couple of weeks. What can make this market move as we enter into the dog days of summer? So let's review 2 items on each side. There's a lot of items, of course, we can talk about, but let's talk of 2 positive and 2 negative. So on the what can go wrong side, we'll start there, right? COVID resurges. Now, I saw a post yesterday reminding people, it's a great Memorial Day weekend, be safe. I don't know about you guys, if you're out there seeing things, what I'm seeing is that everyone's being normal. That's not necessarily the same thing as being safe. So we'll have to see how that goes. Regardless, it is a risk to note. The other item to watch is what the 10-year yield does. So last time we saw the 10-year yield spike, it was February, and the market did not like that very much. So we're going to watch that and see what happens. On the glass is half full side, the optimistic side, earnings. We are only, believe it or not, 5 weeks away from second quarter earnings seasons when we start that again. Remember, the year over year on this is going to blow the doors off. Remember, last year this time we were closed as a country and as an economy. So as I've told you before, before, we can expect it all we want, but when we see these numbers, it's still going to wow us. So as long as earnings start to show some sustainability, that means that we start to see forward guidance from the companies starts to look strong, then that obviously will keep us moving up. And like we did just mention, if we get the 10-year yield to stay contained as it has been relatively so recently, that will also allow us to focus elsewhere on other positives. So we're going to keep you informed on this, and all the levels we'll be watching as the weeks go on. The next big event to watch is the Federal Reserve meeting on June 16th. We've been saying that we may, just might, start to see the Fed start to talking about tapering. So who knows what's going to happen? Nothing on that yet, but we'll see. Remember, what seems to happen, we've got a lot of news coming out in the next couple of weeks. What seems to be is the good news is good news, bad news is good news, great news is not so good news. So we just have to see. That's how the Fed looks at these things right now for the economy. So even though we're in a holiday shortened week, you can tell that there's a lot of fireworks left to go this week, mostly in the labor markets. So we'll keep an eye out on that. Wednesday, today, Thursday, and Friday, all big days for data. So we'll be back next week to unpack what happens this week and talk about, again, that going forward in the market update video next Tuesday. Friday, watch for the planning video. I encourage you to watch it. There's a lot of ideas that I'll share with you to prompt some additional planning ideas as we navigate the data, the policy changes, the plans and plans on how to deal with them. I mentioned a few of those in last week's video, so you can go back and take a look at that if you missed it. Until then, stay safe. And again, congratulations to all the graduates. Now, I don't know if Facebook is a good indication or not of this, but if it is, there's a lot going on in the cap and gowns industry. So congratulations on the graduations. Have a great week, and we'll talk to you soon.